our effort is to make sure that we select the companies which have very strong competitive edge, high barriers to entry, and which can sustainably earn higher rate of return on capital invested, which should be higher than the cost of capital over sustainable periods of time, and make sure that they are able to reinvest the cash flows back into the business at higher rates of return. The second important thing is that companies should have a clean accounting structure and a good corporate governance. The third most important is the management, because we acknowledge that we are not going to run this company. It's the promoter and the management team which is the most important, and they are going to run the daily operations. So it's very important that they are passionate about the business, have high levels of integrity, and they are futuristic. And also, what we also kind of look into is that there's a very high evidence of prudent capital allocation in the stocks we select. So these are the few things which we look into, and last but not the least, obviously the price which we are buying it, which is valuation, which we make sure that there's enough margin of safety, because the first rule which we follow is don't lose money, and rule number 2 is follow rule number 1. So the most important part is that don't look at upside, but make sure that the company doesn't lose money over a medium to long term. And once we do that, we have seen that we have found multi-baggers and compounders in our portfolio. And small cap funds and mid cap funds tend to generate higher returns than large cap, but investors need to be aware there will be bouts of volatility. The volatility of small cap funds will be higher than the large cap funds. And if they have the stomach to digest, this should form part of their asset allocation.